Today, we're going to take a look at the opening range breakout strategy for the stock indices, and we're specifically going to look at the opening range breakout EA version 3.1 and look at the ways you can set that up for trading indices in different ways. And we're going to look at all the settings and the inputs for the EA so that you can configure it basically as you like. So the new version of the EA has lots of new settings in it, which means that you can now trade on either 1 minute charts, 5 minute charts, 15-minute charts, in fact, any time frame you like on any index you like, and it's completely configurable. So let's get into it and have a look at the EA in detail. Okay, so we're going to take a look at the opening range breakout strategy. So I'm going to go through the theory behind the strategy quickly, and we're going to look at some examples of the EA taking those trades. So the opening range breakout strategy is something that you trade on the stock indices, but you can also apply this to anything that has momentum at a specific time. So for example, individual stocks at the open, you could also use the EA to trade those with. But what the theory is as the stock market opens, we get one of two things happening. Either we get a tight contracted range at the open where there is no direction for the initial sort of volume of orders that enters the market, or we get a decent sized candlestick drawn, which indicates that there is a range forming that the market is going to take a directional break from, i.e. it's going to try and make a move for the day. So what we're interested in doing with the opening range breakout strategy is finding a range that is like the Goldilocks zone, if you like. It's not too big. That means that we won't be able to get a 2-to-1 or more risk reward ratio out of it, but not too small that we are going to get whipsawed at the open and stopped out over and over and over again. So the research that I've personally conducted on the opening range breakout strategy, of which there are a lot of variations, is that the 5-minute opening range to the 15-minute opening range tends to be that Goldilocks zone where we get enough range of movement coming in, but not too much. And it's early enough that we can catch and move for the day if it's going to start. Typically, we are going to get one of two things happen. Either the day ends up being rotational, where the market just has no direction. And on those types of days, obviously, breakout strategies are going to fail. They're not going to work. Or we get nice, big, strong, trendy type days, which can obviously, as you see here, revert back as well in another direction. And those types of days are the days that we make our money. So the way that the strategy works is this dotted line here is the market open. So for me and my personal circumstances, I'm in the UK. This is the NASDAQ, which opens at 9:30 New York time. For us in the UK, that is 2:30 p.m. And obviously that changes slightly when the clocks change. But my broker has that time down as 16:30 on the chart. So what I've done is I've plotted a little red line here so you can see that that is the opening candle, and you can see that there's a volume spike here. That happens every single day. So if you want to find the open on your specific broker's chart, the best way to do that is just look at the volume and see where it spikes up every day. And you'll see at the same time every day, you get that volume spike happening. So there's the normal volume, and then we get that spike up there, which is around about 50% more volume. And that is always at the same time, which is 16:30. So that's the way that you can find the open. This strategy works incredibly well on the NASDAQ, the S&P 500 and the Dow. You can also trade other indices like the Russell and obviously the European indices, the DAX and the FTSE, also very good. They open at 8 a.m. UK time for me, which is 10 o'clock broker time on my chart. So that's how you identify where the open is. And as you can see, before the open, you tend to get quite rangy, small candlesticks. And then all of a sudden, as soon as that candle goes in at 9:30 New York time, the size of the candlestick is like 3, 4, 5 times larger than normal, where that volume comes in and the market comes alive. So what the EA does and what the strategy does is it looks for a candlestick that is of a minimum and maximum size. So research has shown that around about 10 to 20% of the average daily range of the instrument is a good measurement for finding a range that will allow you to take a breakout without getting stopped out too quickly and capture that move if it happens for the day. So ADR stands for average daily range, and that is a measurement of the average movement of an instrument every day. So for example, in this case, you can see we've got the dashboard here for the expert advisor, and you can see here that the ADR reading for the NASDAQ for the last 10 days, and this is configurable in the EA, you can use ADR 5, ADR 3, or if you wanted to, ADR 1, which is just yesterday's range. But I use the average daily range of the 10 days, and that is 5885 in this case. So when you set the EA up in the settings, you can set the minimum range and the maximum range as a percentage of the average daily range that you would like to trade. So for me personally, I have it set at 15 or 0.15, which is 15% of the average daily range. And the maximum range I want to see is 40%. So you can see that the EA here plots that the minimum range that we are going to trade today is 882, and the maximum range we're going to trade today is 2354. So that is 15% of the average daily range and 40% of the average daily range. So what we're looking at here is I want the candlestick of the first 5 minutes of trading at the open to be at least 882 in size. Okay, if it is, what the EA will do, or what the strategy does, is place a pending order at the high and the low of that candle, and we wait for that 5 minute candle to be broken either to the downside or to the upside, and we assume that there is going to be a momentum break today. And if there is, we go with it, and that's how we make the money. If that range is too small, what the EA will do is it will say, right, that's too small as a range, or if it's too big, for example, we're not going to trade that today. So it will do absolutely nothing. And then we move on to the next candlestick. So in this case, I'm on a 5 minute chart, and we'll go through some variations of the strategy on different time frames in a moment. But the next candlestick here, this one here is the 10 minute. So we've got the 5 and the 10, and it will measure the low of that 10 minute candle and the high of that 5 minute, and it will see if that falls within our parameters. If it does, again, we place a pending order and we attempt to take a break of that range. If that is not right, it will leave that alone, and then it will take a measurement of the third candle, which in this case is the 15 minute range. If that range is within parameters, we will take a break of that range. Okay. If that is not, it will wait for the first 30 minutes of trading to be completed on the 5 minute chart, which would incorporate that high there and that low there. So this would become your range, and it will attempt to take a break of that range. And in this case, you can see obviously it broke short. So you would have taken a trade at that short there and made the profit down here. Okay, so that's basically the operation of the strategy. We'll look at it working in the strategy tester in a minute, so you can see exactly how it operates. But the strategy in a nutshell is we're looking for a decent size range to form, showing us that there is enough movement to trade today, and there's not too little volume or too little interest in direction for us to want to get involved. So what we're doing by using a minimum range and a maximum range here is we're saying we don't want the market to be too contracted, because if it's just moving up and down with small candlesticks, every time we take a trade, we're likely to get stopped out. So we want some distance moving, which shows that there's enough interest in market participants to be moving today. But we don't want them moving too far, because if they've done that in 5 minutes, the chances are there's going to be little left for them to do, and we're just going to chop around in here all day and not actually go anywhere. Okay, so that's why we have a minimum and a maximum. So that's the 5 minute variation of the opening range breakout strategy. Some people like to trade on different time frames using the same theory. So at the end of the day, it is just a breakout strategy. It's just that we know when the momentum is actually going to arrive at that opening bell. So some people will trade this on the 1 minute chart. So you can switch over to the 1 minute chart, and basically just do exactly the same strategy. Sorry, the EA's wanted to trade 5 minutes because I've got it set up on 5 here. But you can trade on the 1 minute chart and trade the first minute of price action. So that's the first minute that's gone in there. So again, you would monitor that range and you would decide whether or not you're going to take a break of that range based on the size of the candlestick. The 1 minute time frame obviously is a lot more volatile, but the advantage of the 1 minute time frame is that if it puts that 1 minute candle in and then, sorry, the EA's just updated, so it's flick the chart forward. But if that 1 minute candlestick is the very high or low of the day, you are catching the very start of that move, which can obviously turn into an absolute monster trade. However, at the beginning of the market, there tends to be a lot of orders coming in. So there is quite often a lot of whipsawing. So it's entirely up to you which time frame you want to trade with the EA. And the EA can be configured to trade any time frame you want, which we'll go through in the settings in a minute. So that's the strategy. And obviously, some people will also trade 15-minute charts with this. So you can trade the first 15 minutes of price action, and then you could look at the second 15 minutes of price action, the third 15 minutes of price action, and you can take a break of absolutely any real range you want to on any time frame. So if you like, you could just use the 1 hour time frame, and it would wait for the first hour of trading before it starts to take trades. The other variation that people like to trade is what's called the pre-market breakout. So where we have the open here on the chart, you obviously have price action happening before the market opens. So these candlesticks prior to the actual open. Now that first 5 minutes of price action sometimes, as I say, is the start of the move of the day, and it is the high or the low. So if it completely collapses down straight away and just goes for the day, if you take a break of a range before there, you are getting in at the very start of the move. So you can program the EA by just changing the inputs to actually trade a pre-market range as well. It's now configurable that you can trade any way you want to. Okay, so that is the opening range breakout strategy. And obviously the idea of it is that we are just taking a range break of initial price action, and we are using standard risk reward, and if you like, trailing stops to manage our risk if the market breaks. If the market doesn't break, we will just stop out on the market and wait for it to go. I'm going to go through the logic now of the EA and how the EA works. So within the EA settings, you've got multiple inputs here in the strategy settings section. So you can select the time frame that you want the EA to run on. At the moment, it's set on 5 minutes. And what the EA will do is every time a candlestick closes, if the chart is not set to this time frame, it will automatically switch over onto this time frame for you. So you want to set this up on whatever time frame you're looking to trade with. The ADR period for calculations is set as default to 10, but you could set that to whatever you want to. So what this will do is it will look at the average daily range of movement for the instrument that you're trading over the last 10 days, and it will use that to decide how big or small those ranges are going to be. The advantage of using average daily range over standard pips, which is what a lot of people tend to do, is that it's dynamic. So, for example, if you have a market which is incredibly volatile and the volatility index is going through the roof because of some worldwide event like a new president coming in, or it's earnings fortnight, and we're getting a lot more movement intraday than normal, you want to adjust your ranges to accommodate that extra movement. If it's a very, very quiet market like the summer months where the ranges tend to be smaller, you want to reduce that range that you're measuring. Okay, so every instrument has a different average daily range. The NASDAQ moves an awful lot more than the Dow does, so you cannot trade with the same sizes of range on the Dow and the NASDAQ. It has to be dynamic to the instrument that you're actually trading. So that's why we use ADR for all of the calculations. The minimum and maximum percentages we've discussed. 0.15 is 15%, 0.4 is 40%. So the Goldilocks zone, if you like, that I have found is somewhere around about 10, 15 or 20%. 20% has given the best results. However, sometimes at the open, the market doesn't move 20% for quite a while, which means that you don't get any trades. But it is more reliable using a 20% range. 15 is kind of second best. 10 is fairly aggressive. Aggressive trade settings will give you a lot more trades, and you have the opportunity to make an awful lot more profit, because if you're targeting 10% of the average daily range as your range to start with, you've got 90% of movement available to you. So getting a 6, 7, 8, even 10 risk reward ratio trade is very achievable. However, you will get stopped out more in those choppy market conditions. So it's personal preference, and I'd encourage you to go and test different range sizes in the back tester and see how it works and see what sort of suits your trading style. They've got the maximum range there. That's defaulted to 40%. That's kind of what I've found is the best. It doesn't really matter too much what you use. It just has to be higher than the minimum, obviously. You have different inputs now in this version of the EA, in version 3.1, for the 1 bar range time, 2 bar, 3 bar, and 6 bar. And these basically are times on your broker chart. So for example, here you can see that this is the 1630 candle. So this is the open for me in the UK of the New York market. It opens at 2:30 p.m., which is 9:30 a.m. New York time, and my broker plots that as 16:30 on the chart. So what I am saying with these settings here is on the 5-minute time frame, I want to trade the first 5-minute candle. So at 16:35, which is the opening time of this candle, the second one, I want you to measure the range of the first candle and then take a break of it if it's correct. And then if that is not big enough and we haven't got enough movement there to get 20% or 15% in this case of the average daily range, at 1640, I want you to measure that one and that one combined. Is that range big enough for me to take a trade off? If it is, excellent. If it's not, we move on to the next time, which is the 3-bar range. So we will take a range measurement from that bar, and the opening bar, which is those 3. So when this bar opens at 1645, we measure those 3, okay? And so on and so forth. You've got a 6-bar range as well. And the idea behind this is a lot of people like to trade the 30-minute range, which is what's classed as the TPO, or the time price opportunity candlestick in futures, which is the very first 30 minutes of trading. It's deemed that often, if the price has not moved very far within that 30 minutes, we are either going to get a rotational day where the market has no directional bias, or we are waiting for something to happen, quite often news event at 3 p.m. or 10 a.m. New York time, where the market will then suddenly take off. Okay, and you can see here that that would have been your 30-minute range on this particular day, and that break happened after that 30-minute range was put in. In fact, it happened after an hour's worth of trading on this particular day. So the EA dynamically waits and sits there patiently for some kind of movement that we can use to our advantage to take a trade on. There is also another entry here in the EA, which is the session end, and trades are automatically closed and all pending orders are cancelled at that time. So you would typically set that to be at the end of the day, or the last sort of candlesticks on your broker's chart. So for me, that is set to 2300. So if I go back a little bit in time here, this is a period separator for the day, and I hover over this candle here, you can see that the last candle here is 2310. So the EA will automatically close all orders for me if they are open, trades running, and cancel any pending orders off just before the market closes. And again, you can adjust this to whatever you want it to be. Okay, so we're going to run the strategy here on the NASDAQ. So I'm just going to start this up and let it run. So we've got this set up to trade 15%, I think, of the average daily range. So let's get to the open. There we go. So I'm just going to slow that down and pause it 1 second. So here is your open. So if I plot a little line there, you can see that that is 1630. So you can see all the tight price action we had before the open. And then we've got to this big candlestick here that we've put in, which is your first 5-minute candlestick. Now, that first 5-minute candlestick here was large enough, in this case, for us to trade. It was 785, which is above the minimum of 550. So what the EA's done is it's placed those pending orders for me on the chart, and we are away and trading. Okay, so the next candlestick, which was the 10-minute one, and the one following that, which was your 15-minute one, were inside bars on that candlestick. So they didn't trade at all. So what the EA does, every time there is not a trade, it will cancel off the previous pending order. And at the close of that candle, it will place a new pending order. So you can see it's placed new pending orders here. And then on that candle, it cancelled off again and placed new pending orders again. So what it's doing is it's automatically remeasuring every time there is a candlestick close, depending on the inputs you've put in. The reason for this is because we have built into it a loss recovery system. So the actual lot sizes are automatically calculated for you based on your risk parameters, which we will cover in a moment, and also on the loss recovery system. So it's important that the EA automatically cancels pending orders every bar and replaces them, because if you've had losses on other instruments, it may be the loss recovery system wants to increment the lot size and try and recover those losses for you. So we'll cover that in a little bit more detail in a minute. But as you can see there, we actually got a break there on the 3-bar range. So it's the 1 bar, the 2 bar, and the 3 bar are all the same range in this case. So it's classed that as a 3-bar range being okay to trade. We've gone long here, and now the market has started to take off. You can see the stop losses are placed here and here. So that is the stop loss for the short orders. That is the stop loss for the long orders. So we'll let that one play out and see where we go. So we've broken to the upside there, and we're on our way. So as you can see, we also have two other things happening on the chart here. We've got a trailing stop loss here, which has just kicked in. So there is a trailing stop facility, which we'll cover the inputs for in a moment, but you can set that to automatically start triggering after the market has moved a certain distance, and you can decide how big you want that trailing stop loss to be. So when the market in this case has pushed the same distance as roughly where the stop loss was initially, which is here, it will automatically drag that stop loss up to protect your risk and give you a risk-free trade. Obviously, the danger in this is now that this comes down, collapses, stops me out, and then pushes on to target. But that's a risk you take with trailing stops always, isn't it? So, but there's a trailing stop loss, and you can see that kicking in. The second line we've got here is the partial close target. The EA has the option to automatically close out a percentage of your trade after we've moved a certain distance. So the stop loss set here was 15% of the average daily range. Therefore, I've placed a partial close of 75% of the order at 30% of the average daily range. So when we get to 2R, or twice our initial risk, we will close out 75% of the order and see if we can get a runner today to go for that big ADR push. If I shrink the chart down here, you'll see there is the target. So the target I have set personally in the EA at the moment is 1 ADR. So I know the average movement that this instrument makes on a daily range is 3670. So if today is going to be an average day or a beyond average day, we would expect price to potentially get to that sort of distance. So if we're going to get a trend day, that's as far as we'll probably get. Okay, so that's where I set my targets, and this is all adjustable in the EA, which we'll go through the settings in a minute. So let's let this one play out and just see where it goes. Not quite got to target there, so we didn't get to our partial, but what we did do was stop out on our trailing stop for a profit of 23.82. Okay, so that trade is now complete. You'll notice that the pending order is still in place. So these pending orders are left in place because the back testing has shown that removing those pending orders actually has a negative effect on the P&L. The reason for that is if the market tends to try and make a break to the upside in this case and fails, it will often then attempt to break down in the opposite direction. So if the buyers enter the market and there isn't enough volume of sellers to let them continue that rally, they will basically try to go back the opposite direction and take that break south. And often you'll find you get a false breakout at the start of the day, which means you would stop out on that first order, and then you would take a second order to the downside, and that would become your profitable trade for the day. So there is the option there to take a second trade if the first one doesn't work out, and it's important that that's left in place. If you don't want that, you can just manually cancel it off. So you would just come over and cancel the trade off in your terminal. But the vast majority of the days, if you do not get stopped out on your initial break, it will not get back to that area. This is the open, and often price won't get back to the open if it's done a break for the day. So we'll let that one play out and see what happens for the rest of the day. There we go. We got to the end of the day, and that candle at 2300, which I have set in the inputs, it's cancelled off that pending order, and we're done for the day with a nice little profit. Okay, so we'll move on to the next day and we'll see what happens on day 2. So we're getting to the time now. So there's our open. So you can see here we've got a 2-bar range, which is no good. So there's your first 5-minute candlestick at the open. That range was too small to trade. So it's now measured the 10-minute open, which is the first candle and the second candle combined. And as you can see, that is currently sitting at 435. The minimum we need is 558, which is 15% of the average daily range in this case. So again, there's no pending orders in play. So what we'll do now is we're going to measure the third bar and see how big that third range goes in at. There we go. Third range, again, was too small. So we didn't take a trade. We're just slightly too small. So today, as you can see, there's your pre-market ranges, and the actual open isn't really any bigger than the pre-market. So today is a day that is likely to not have enough range of movement to actually take a break. So what we've done is we're sitting there and we're doing nothing today. The 6-bar range, the first 30 minutes worth of trading has also gone in, and we haven't gone anywhere. So the EA is basically saying today, there's just not enough momentum in the market. And results and research again show if the opening momentum is too small, you won't get a good break within the first hour typically. So your options are to reset the EA, so come into the inputs and change those inputs to an hourly chart. So you could then say, okay, we haven't had a break now for the first 30 minutes. Nothing seems to be happening. So I'm going to set the EA up now to trade on the hourly time frame. So what I would do is set that to 1730 and say, okay, look at the first hour, see how we get on there. And then you might want to go 1830 and then look at the second hour and maybe set this one to 0. So if we haven't had any decent movement within the first hour or 2 hours, i.e. we are just in rotation today and not going anywhere, I'm not going to trade because there's no way we're going to really make any money doing that. So this is a day where the EA has gone, sorry, not good enough to trade. And if we let that play out, you'll find we did get a break to the upside, but that was probably around about 30% of the average daily range. So today it's just really not had enough movement. Now you could have made money out of this, but look at the price action and how whippy it is. When you don't get that initial opening momentum, you tend to get very whippy price action. Whippy price action notoriously will stop you out. So the EA is clever enough that it knows that it's not a good day to trade today, so we'll just give it a miss. There may be other instruments today that the EA is running on, like the S&P 500 or the Dow, which actually have had volume and momentum. So it would trade those ones for us. It may have been that the DAX and the FTSE this morning were alive and we were trading those and we made our money there. But if the EA identifies no momentum, it will not take a trade. Okay, so that is basically the logic for the strategy, and that is how the EA works with those inputs. So within the EA, we've got the main strategy settings, which we've obviously covered. So we've set this up, we've got it ready to trade for us. So we need to decide now how much we're going to risk. So you've got risk settings section here, and we have the first input here, which is a starting account balance, which is used for display purposes only. So all this does is it says up here, starting balance. Okay, so what this will do is if you put a starting balance in there, that's what will appear here. If you don't put a starting balance in and you set it to 0, it will pick up what your account balance is and it will use that. So it will say, this is what we started at today, and then your current balance is obviously displayed underneath. We have 3 ways that you can risk your money within the EA and within the strategy. The first one is by using a fixed lot size. So fixed lot size is for people that know roughly what size of lot they want to use. Or it's for people that are trading futures with the EA rather than CFDs. So if you're trading futures, you can only trade in standard contracts. So you will only be able to use 1, 2, 3, 4, 5, etc. You can't use fractions because a contract is a round number. If you're using CFDs, you can trade anything you like. So you can trade 1.5. So this is the actual lot size that will be placed. Most people, however, will tend to use either a percentage balance of their risk or a fixed amount of money to trade with. So I personally like to use a percentage risk of my account. So if you set that to 1, what the EA will do is it will automatically calculate the right lot size for 1% of your current account balance. If you are using monetary risk, what the EA will do is it will basically risk exactly the same amount every time on your initial trade. So in here, for example, we've set 200, which means that it will risk $200 of or whatever your base currency is on the initial trade. And obviously these can be adjusted on the fly as you go. You also have here the maximum allowed lot size if using a lot size risk, and the maximum allowed money risk if using a percentage or a money risk basis. So if we are using a lot size here of 1.5 and we set in here 10, what the EA will do is it will use that 1.5 lot size, but the maximum it could ever trade would be 10 lots. This is used for the loss recovery system, and also if you accidentally fat finger it and go, I want to trade 15 lots instead of 1.5, it will limit it to 10 lots. That only kicks in the lot size maximum if you are using lot size for your initial trade. If you are using monetary risk or percentage risk for your risk parameters, it will ignore that completely. So it will not use a maximum lot size, but it will use a maximum amount of money that it will risk. So if we are risking $100, for example, on our initial trade, we could say I want to risk a maximum of 300 at any point if I am increasing my lot size. So it's kind of a fallback in case you accidentally put an extra 0 on, but also for the loss recovery system, which we'll cover in a bit, it will make sure that that has an upper limit that it cannot trade beyond, which is quite important, obviously, if you're using lot increments in your trading. So the loss recovery system is the next part we're going to look at. And the loss recovery system is something that was automatically built into the previous version of the Expert Advisor. But what I've decided to do is, due to what people wanted, is have an option to turn that on and off. But also I've enhanced it so that it can look at trades taken on other instruments as well as just the instrument that it's placed on and it's trading as well. So the way the loss recovery system works is, if you have a losing trade, it will ever so slightly increase the size of risk on the next trade that it takes. So, for example, if we were trading the S&P 500 and we had a trade that went long and it stopped out, what will happen next is when the next pending orders are placed, the EA will slightly increase the lot size to try and recover the loss that we've just taken and make money on top of it. Now, you could just say, right, well, that one stopped out, that's fine. And what I'll do is I'll take a short and hopefully that one will work out, go to 2-to-1 risk reward ratio, and we've covered all of that loss and we've made money as well. That's absolutely fine. But what happens is occasionally on indices, you get a very rangy market, which can happen and last 4 days. The market will contract, and sometimes you'll just get periods where you get stopped out over and over again. And it's just part of trading. There's nothing you can do about it. Losing streaks are going to happen. So the loss recovery system is designed to help get those losses back to ideally either a break-even point or small profit a little bit quicker and help you make more money and reduce that overall drawdown that you're going to take on the account. So it has a lot multiplier for loss recovery. So if you were, for example, to make a loss of $100 on your first trade and you had a loss recovery multiplier set to 1.1, the EA will automatically risk 110 on the next trade for you. If that was then a loser, you would be down 210, and it would multiply this by your lot multiplier again and just gradually increase that risk until you get a winning trade. And what this means is when you have a slightly higher risk, when you take those breakouts, your target down here of 2R, for example, doesn't have to be quite as far away if you're using slightly higher risk. So every time you increase your risk, the amount of distance you need to move to recover the loss that you took on the previous trade gets a little bit closer and closer and closer and closer, until at some point you get to a point where it only needs to really go 1R and you recover all of the previous loss because the lot size has got bigger and bigger. But you have to have a maximum that you will risk, because it could be that you get 10 or even 15 losing trades in a row, potentially. Very, very rare for that ever to happen. But if it was, you would tend to get a very, very high risk, and potentially you could blow your account. So you have to have an upper limit, which is where those previous inputs come in up here. So anything around about 1.1, 1.2 probably is acceptable. The more aggressive you get with that, the more you're going to go into drawdown on your account, and the bigger those risks are going to become, and the faster those risks will become as well. So just do some testing. Bear in mind, obviously, if you use something like Martingale and put a 2 in there, it's just going to double the risk every time. You can very quickly get into hot water doing that, so it's not advisable. But small lot increments will help. That is an option that you can now turn on and off. And you also have a new mode, which is called portfolio mode. The way that portfolio mode works is the old loss recovery system in the previous version of the EA only worked on the instrument that it was placed on. And that is the way that it works if you have this set up as it is here with that set to false. So, for example, on the NASDAQ here, if we have a losing trade of 100 on the NASDAQ, and then we have another losing trade on the NASDAQ of 110, and then we have another losing trade of 122, or whatever the lot increment is going to be, we will increment our lot on the NASDAQ until we get a winner and we get back to profit. Okay, and then it will reset back to the original risk. If you are trading on the NASDAQ, on the S&P, and on the Dow, for example, though, what the portfolio mode will do is if the NASDAQ has a losing trade, it will, when the S&P's trades are placed, increment the lot on the S&P 500's trades to try and recover your losses from that previous NASDAQ loss. And then if the S&P was to lose, for example, the Dow would then increment its lot size again to try and recover the loss that it made on the S&P. So it's always looking back one trade across all instruments that you are trading. And this uses the magic number system, okay, which you can see down here. So as long as you are using the same magic number on all of the instruments that you are trading in your portfolio, the EA will be able to dynamically see what is happening in your portfolio as a whole and adjust risk for all of your instruments. So it's an option that you can turn on and off as you desire. So what you can find sometimes with this, if you're using the portfolio mode, in my experience anyway, is if you get a losing run, you could find that the S&P, the NASDAQ, and the Dow will all have losers on the same day, because quite often they become quite correlated. So if you took a loss there and a loss there and a loss there, what you'll find is that the next day, when you take a trade on that first instrument, your loss increment will already be on number 4. So it will have gone up 4 times, because we've had 1, 2, 3 losses, and now we're taking the 4th risk. If you get another bad day where they all go wrong again, that will very quickly get up to 8, which would be pretty much double what your initial risk was. So 2 days later, you're risking twice as much as you were on the first day. What it means is if you get a clean trade on that day and it breaks very nice and cleanly and easily, as it does easily 3 times a week typically, you're going to suddenly recover all of the previous losses with very little movement. Okay, so you can use either the portfolio approach or individual. And if you have it set to false with the portfolio mode, all it will do is it will just keep monitoring, in this case, the NASDAQ. And it will say, if the NASDAQ trade was a loser last time, I'm going to increment. If it was a winner last time, I'm absolutely fine. And I'll carry on with my normal risk. So it'll always reset your risk back to normal if everything is going well. Okay, so that's the loss recovery system. I'm going to quickly explain how it works in a little bit more detail for you, because there are different rules depending on different outcomes from a day-to-day basis. So the way that the loss recovery system works is it uses the previous day's profit and your profit today and puts a calculation together to see whether or not we are overall winning. Okay, so if, for example, as we see here, we have taken no trades, what it will do is it will basically go in at your standard risk, which in this case is $100. Okay, so it will take that trade, and if the outcome of that trade is a winner, happy days, we just stay on $100. If the outcome of that first trade is negative 100, okay, it will then increment that risk for you. Okay, let's say, for example, we took a trade long and it stopped out, and then we took a trade short and that also stopped out, and we came back to just a range bound day. So we took 2 losses. What it will do on the next day is it will show in here your previous day's loss, which would be $210. Okay, so as we have no trades so far today, what we will do is whatever the risk was yesterday, we will stay on that risk. So if, for example, yesterday we took a minus 100 and then we took a minus 110, the next trade amount that will automatically be set when that second trade stopped out is going to be an increment of whatever that would be. So let's say, for example, it's 120 is our next risk. Okay, so it would say, okay, well, yesterday we made a loss, so I'm going to stay on 120 as my risk. Now, if that first trade that we take today is a winner, excellent. What we'll do is, if that winner is more than yesterday's loss, we will go back to resetting ourselves back to square one, back to $100, because what we've done with this trade is we've won today and we've recovered all of yesterday's loss. If the trade today moves up and our trailing stop, for example, was to kick in and it was to come back down and stop us out, and we made $50 on that trade, our total is actually not recovered. So it would keep your risk the same on the next trade that it takes. So because we didn't manage to recover yesterday's loss, our risk stays as it is. Okay. So for the next trade that this one takes, short, for example, it would keep that risk the same. And if that one works out and we suddenly made $350 on that short, everything gets reset back to zero. Okay, so it's clever in the fact that it can remember what's happening from day to day, and it just ever so slightly increases that risk until it's recovered the previous day's loss. The important thing to remember here is this is running on a day-by-day basis. Every time you launch the EA, it will look at the previous day and the last trade taken, and it will adjust the risk based on that last trade. If you want it to continuously increment the risk and also maintain the same risk, if we have a winning day that doesn't beat the losing day from the previous day, it must be running continuously 24/7 on a VPS. Because every time you reinitialize the EA, it will reset that recovery cycle. So the best thing to do is to place the EA on a VPS and leave it running on that VPS. It's not the end of the world if it doesn't, because it will still look at yesterday and say, well, it was a loss yesterday. What was the last losing trade we had? 150. Okay, so I'm going to use slightly more than 150 on my next trade. The problem is, if yesterday was a loss and we made a winner yesterday as our last trade, it will look at the last trade and go, well, we made $50 yesterday. We made $300 loss, but I'll increment that $50. And if that $50 is below the minimum risk, it will reset itself back to minimum risk. So it won't do a full loss recovery job for you, but it will still try to recover as much loss as possible. So it's intelligent in the fact that it knows it needs to recover losses, but unless you leave it running permanently, it's not going to be able to do the proper job for you. That's basically the basis of a loss recovery system if there's no trades taken today and we've got a loss from yesterday. So if there is a profit today, for example, and a profit yesterday, we are just going to use our standard risk that we like to use, in this case, $100. If yesterday was a profit, we're not going to do anything aggressive. If yesterday was a loss, we will try and recover yesterday's loss, but it will only look at one day at a time. Okay, it will not try and recover your entire account loss. So the previous version of the EA would look at your starting balance, and if you were below your starting balance, it would continue to get aggressive. The problem with this is it can get too aggressive too fast and stay aggressive for too long in a losing streak, which incrementally can get your lot sizes very, very high. So this version works slightly more intelligently, and it's less aggressive. makes slightly less money, but it also will not go crazy with the lot sizes. So it's important that we keep our risk under control, which is why we have that maximum risk allocation in the settings. Okay, so that's basically the loss recovery system in a nutshell. It is optional. You can turn it on and off as well. So if you see suddenly that the next lot size is too big and too risky, so for example, if this had jumped up to 280 and suddenly you had an open trade on something which had open profit of $500, you might want that not to actually take a trade at 280, because this one is looking like it's going to get all the loss back. But there's a pending order that could be going in at that size. So what you can do is you can at any time come into the inputs here and just change that to false, or you can adjust the portfolio mode, or maybe move that down to just 1, which basically resets it back to normal. So you can adjust it on the fly as well, but this only updates on candle close. So if you make a change in here and press the OK button, it won't suddenly change. It will wait until the candle has closed, and then it will update and say what it's going to do next. So just bear that in mind when you're using it. Stops and targets, very straightforward. We're using ADR to measure the minimum range and the maximum range. So it makes sense to use ADR for our risk profile as well. So you have options here for your multiple of stop loss and take profit as a percentage of ADR. So like the previous inputs, 0.15 is 15% of the average daily range. You should set your stop loss to be equal to or less than the minimum range that you're going to use. So most of the time, if you set this to 0.15, for example, it's not going to get a range of exactly 0.15. It'll probably be 0.16, which is 16%, or 17, 18, 20, 21, whatever it may be. But you're not going to usually get exactly 0.15. So if you set that to 15, 9 times out of 10, probably more than that, what you're going to find is your stop loss will be within the range of the pending orders. So your take profit, again, works the same way. If you set that to, as I have it, 1, it means it places it 1 ADR away. So on those big days where we get those big runners, which move the average daily range of the instrument, we will hit that target. You can adjust that to be whatever you want to be. We also have a partial profit take system, which I'll explain in a second. And the partial profit take system obviously can take a partial profit at a smaller percentage of ADR for you and let that runner go to the full target. You have also a trailing stop system, which also uses ADR. So the trailing stop system you can set to true or false. If you set it to true, it will obviously trail the stop loss, and you can set a trailing stop multiple of ADR. Typically, I like this to be roughly whatever my risk is going to be. So if it moves 1R in my favor, I like to reduce that risk and cut that risk as fast as possible. But you can set it to start at any time. So if you set this to 0, for example, it will trail your stop loss by 15% of ADR immediately. So as soon as one candle moves in your direction, it will straight away adjust that risk up for you. So you can adjust it as you see fit and as you prefer to have your trading stops working. Entirely up to you. You also have an option here to trail the stop loss until above the break even. So what that does is when you have that set, when the price pushes up in your favor, every candle it will adjust that stop loss for you. And if that stop loss is above your entry price, it will then stop using a trailing stop and just protect your initial risk. So if it comes back down, you're going to get a roughly break even or slight profit depending on how far that candle went when it moved your stop loss. So that's your trailing stops. They are obviously pretty standard in most trading strategies. It's up to you if you want to use them. I'm not the biggest fan of trailing stops. Trailing stops tend to get stopped out. So I quite often like to use the break-even mode where I will let the trade breathe and let the trade run, but it's entirely up to you. Again, every setting in here can be adjusted, and I would encourage you to use the back tester to test the settings and see how they affect the profitability, the drawdown, and the operation of the EA. Partial take profits are where we have those lines on the chart. And what the EA will do is when we get a close of a candle above or below those partial profit take lines, it will take off part of your order. Very straightforward. Bear in mind, you can only close a percentage of your order if you are allowed to close fractions of an order. If you're trading on the futures markets and not CFDs, and you are trading with single contracts, you can't close part of a contract, so this will not work. So obviously make sure that if you can, you're trading CFDs so you can trade fractions of orders if you're going to use the partial profit take. If you set this to false, it just won't do anything at all. So setting this to true means that when we move a percentage of ADR, again, if we're risking 0.15, 15% of ADR, we can say when you've got 30% of ADR in my favor, i.e. a 2-to-1 risk reward ratio, I want you to close out 75% of my trade, which is as this is set up at the moment. You can adjust those settings to be whatever you want, 50%, whatever you like. If you want to use this as your actual take profit, you can do so. So if you set that to 100, what it will do is when it gets to 30% of the average daily range and it closes above there, it will close 100% of your order. I'm just going to quickly show you that in operation within the EA, because the reason you may want to use the partial profit take as your actual TP is you can adjust it very quickly and easily. So as you can see here, we've got a trade now running. We've got our partial close at for the long order up here and the short order down there. If we want to, we can double click this line and we can move that line to a different place. And what that does now is obviously it will close out whatever percentage of the order when we reach that line. So this is in the strategy tester, the partial profit close text doesn't move, but it does when you're obviously using it in on a live trading. So as I say, you can use this as your TP if you want to. And obviously when the price gets above that level, let me just move it down so we can see if we can see it working. Okay. So when a candle closes above, not touches, closes above that level, it will close partial order. So you can see we've closed out, the initial lot size was 0.73. We've now got a 0.18 runner. So we've closed out 3/4 of that trade and the rest of it is just going to trail. We'll see how far we get. Okay, so we took the majority of our order off there and then we finished the rest off with a trading stop. So that's how the trading stop, partial close system works. So it's nice to use as a take profit because obviously you can adjust those lines on the fly by just double clicking and dragging them. Liquidation targets. So basically the EA has got here within daily targets, trading is enabled. Liquidation targets are designed for people that are trading prop, but you can also use it obviously if you're just trading on your own funds. The idea behind this is we set a maximum loss and a maximum profit for the day. So if you've got a drawdown limit daily that you're allowed to use in a prop firm, you would set this short of that number. This works on candle close. Okay, so you can set in your liquidation targets here the time frame you want to check to auto close orders. And it's defaulted to 5 minutes, but you can set it to 1 minute. So what it will do is every 1 minute, it will check your P&L, your open P&L, which is basically your closed profit plus, your net profit it checks, which is your closed profit there and your open profit. So if that figure is above your daily target or your max loss, it will automatically close out your orders. You can also get it to automatically delete pending orders as well. Okay, so it's for those that want to use prop. The default set here is 15,000 positive and 15,000 negative. The idea being is that we're not using them. Yeah. So if you don't want to use these, you would set them at a very high figure that your P&L is never going to reach. So for me, obviously trading on a roughly $30,000 account here, it's not going to hit $15,000 in profit or drawdown. If it does, I'm in big trouble. So that's where that is set as default. But if you set it at 150, for example, it will automatically close out your orders and your pendings at $150 in profit or higher, obviously, because it checks every 1 minute. It's not going to do it exactly as soon as it hits. The problem with doing it exactly as soon as it hits is if you say, I want to close out when I get to $150 in profit, and before the EA manages to close your position, it has slightly slipped, it could close out at $149 in profit, which means the EA would then go, we haven't hit target yet, and it will continue to trade. So the idea behind checking every candle close, and if you do it on the 1 minute chart, is you will be above there and you will get a price which is higher, or a profit target which is higher. With your downside targets of 150, for example, in this case, as a loss, make sure that is below the maximum loss you want to take. So in prop, for example, if you had a 1,500 maximum loss you could take on a day, I would suggest you set this to somewhere around 1,300, so that if it pushes a little bit beyond that, it will auto close. Most brokers, or rather prop firms, have a system now where they will auto liquidate your trades for you. So if they don't, obviously this is what this is for. If they do, you don't really have to worry about it. So that's liquidation targets. Visualization settings are pretty straightforward. It's the dashboard. So you have an option here to show the dashboard, which shows this information up here. If you set that to false, it will disappear. So you have two options in here. You can show the range and risk data in the dashboard, and the range and risk data is basically all of this information here, which is not the starting and the current balance. So the reason we have this show balance info in dashboard as a separate input is if you in a coffee shop, for example, and you're trading and you don't want people to see what your actual account balance is, you can hide that away. If you're streaming, for example, and you're using the EA, you can hide that away. Okay, but all the other information is there. So really it's a case of, do you want information shown or not? If you like clean charts, you might want to get that taken away. You've got lots of inputs for customization. You can adjust the font size. You can adjust the spacing between the lines. You can adjust basically the size of the box as well. So it's all completely configurable, and you can decide how far in from the left and how far down from the top you want, which is the X and the Y axis. The last input we have there is the base currency symbol for the display. So this is displaying the dollar sign here. In this case, you can change that to whatever your currency is. Sorry for you yen guys, it appears on the left-hand side. So it would have to say the yen symbol on the front rather than the end. Sorry, that's how it works. But yeah, you can change the currency symbol in there if you want to. This area here is basically your magic number. The magic number should remain the same ideally, so that if you're using portfolio mode, it will know what trades it's working with. But all the magic number does is it identifies the trades that the EA has taken. So the reason you may want to change the magic number is if you are, for example, having two instances of the EA running on the same symbol on the same account. For example, one version of the EA is running the 1 minute charts, or one version of the EA is running the pre-market trades. The other version of the EA is running on a different time frame or running post-market. So you may say, I want to set the EA up on the 1 minute chart to see if I can get a quick shot out of the gates on the 1, 2, or 3 minute ranges. If that doesn't work, I want it to trade the 5, 10, 15 for me. You would need to set two instances of the EA up. You can use the same magic number. However, bear in mind that when the 5 minute candlestick comes into play, if there are pending orders on the 1 minute version, it will cancel those off because those trades were taken with magic number 999, for example. So that's how you would use magic numbers to manage different instances of the EA. Otherwise, leave it as it is, because what it does is it uses the symbol as the identifier and then the magic number. So if you're using portfolio mode, you want the EA to take all of your trades on all instruments with the same magic. There are links in the description if you're watching this on YouTube. Those will give you information about where to get the EA, and obviously links to the website. There is the Discord channel and the Telegram channel. If you've got any questions, you can come in and ask in those. And also, obviously, I live stream multiple times a week, and I use the EA pretty much every day in the live streams. So if you want to see it in action, you can come into the live streams. But if you want to get a demo of the EA, you can download that also from the website. Have a play around with it in the strategy tester. It's totally free to play in the strategy tester. So get the demo, play around with it, do some robustness testing, some back testing with it, try different settings and strategies with it, and see how you get on. It's very versatile. It can trade pretty much any version of the opening range breakout strategy that you can find. There's also 7-day trials available at the moment on the EA if you want to do that. And you can have a live trial of it for 7 days and just use it in the real world on a demo account and see how you get on with it. Okay, so that's the opening range breakout strategy and the opening range breakout strategy EA version 3.1 for MetaTrader 4 and MetaTrader 5.